All right, ICT traders, what if I record every single trading day of my life and I want to share with you guys for educational purpose? So today is silver bullet trading strategy. Actually, I woke up in the London session from my sleep. Then I discovered that I have missed a very, very powerful trade opportunity on Euro USD. Euro USD has been bullish. All right. So now you may be asking me, why am I counter trading knowing that Euro USD is bullish, and then trying to sell from that? So the bullish movement actually started in the London session, boom, and this is the New York session. So I am trading the silver bullet strategy right now. So the silver bullet strategy is basically a strategy that initiated from Michael J. Hudson, and it's a very, very simple strategy that anyone could trade. All right, I already updated the community. I said, guys, let's catch this silver bullet. What pair? I said Euro USD in the 5-minute time frame in this mentorship community. All right, so this is it. Let me just show you what is going on, and then before and after, then let's make money from this short-term sell on silver bullet. So let's quickly do that together. So what do we have? Silver bullet. Now, to get the silver bullet indicator, it's pretty much easy on TradingView. Just simply come to indicators and search for silver bullet by Lux Algo. Click on it, and this indicator will delineate the 3 different silver bullet sessions that you have on your chart. All right, so this is what you have right here. For today, specifically for today, this was the first one, this is the second one. And the silver bullet strategy is a trend continuation or trend reversal pattern. You can use it for anyone. All you need is a fair value gap. But then I did something different on this particular one. I went to the 5-minute time frame on Euro USD. All right. And what I saw was so crazy. I want to show you what I saw actually. So I came here, and then this is the silver bullet time. All right. Now, this is what ICT said. You just need some kind of a shift in market structure. It can be from the outside or within that time. So this particular silver bullet time is the one for 10 a.m. to 11 a.m. All right, 10 a.m. to 11 a.m. New York time. New York time. Make sure you do that, because anyway, the indicator will just delineate it automatically for you. If I should enable it right here, you're going to see it. Okay, it's already there. All right, so the indicator will do the business for you. It will do everything for you. So all you need is to look for a fair value gap inside. So what I saw was this. It's a bit dynamic. I saw price doing this shift in market structure. All right, immediately when I saw this to the downside, I said, okay, what is going to happen on the 15-minute time frame then? All right, that was when I saw that down here there is a mitigation block that price wants to trade into. That was what gave me the confidence to go bearish on this silver bullet time. Initially, I was thinking I want to go bullish from here, or I want to wait for price to even come here, because this may be an inducement. All right, price may come here and sweep liquidity around that place. But then I say, okay, let me just take this chunk of price movement, just some few pips. I want to take it from there. So I saw this shifting structure, and then on 5-minute time frame was where I did the entry. So I saw this right here. This was not a fair value gap. It was an implied fair value gap. And this strategy, you can actually take the trade inside this, time zone, and then it can even go outside it before it reaches your target. But then I am very much okay taking it here. So I basically use implied fair value gap. What exactly is implied fair value gap as opposed to what you know to be a fair value gap? A fair value gap is simply when there is an imbalance, or there is a gap between 3 candle price action. We have 1, 2, 3. If there is a gap, this is fair value gap. Let me just simply show you. You see 1, 2, 3 candle. You see this high and this low. The gap between this one and this one. So basically, this middle candle, if it is left open, you actually have a fair value gap. So this place is a fair value gap. All right, that is a fair value gap that you want to be part of. So when I saw here there is no fair value gap, but there is something called implied fair value gap, and that is when you have a perfect price action without imbalance. Let me show you that. This is an implied fair value gap. I want to see one just for educational purpose, but then even this one, you could see it. You see this candle and this candle, there is no fair value gap. So basically what you do is to measure 50% of this particular candle. Let me get it correctly. 50% of that particular candle, this one here, and 50% of this one. So that is where your implied fair value gap is. So I took the trade from implied fair value gap. You know, that is the beauty of knowledge. When you know what you're doing, you will be invincible in the market. I just took the trade and I say, guys, you're going to be part of this trade. Let's catch this simple price movement. And I just did that immediately. I want to make some money from here immediately. If I reach my target, I will update you. Even if I don't reach, I want to, because it's a short-term sell, I want to break even when I'm here. Finally, I will break even when I'm there. All right. So look at this. Price may decide to even come back to this area, because there is another fair value gap here. So that's all part of the price movement. Let me show you that particular fair value gap quickly. So you can actually see that price has broken lower than here. There is a fair value gap here, and there is a mitigation block here. So price can decide to retrace into this area before selling again. So that is what I'm expecting price to do. Anyway, I'll come back and update you on what has happened at the end of the trade. Just keep watching. I will definitely update you. All right, ICT traders, welcome back. The trade is still moving. I told you that I will update you on everything going on. So this is it, the silver bullet strategy. Okay, so it is pretty much easy to do that. You just come to your chart, you look for this, but I prefer the 10 a.m. to 11 a.m. New York time silver bullet strategy, and the target is always to target at least 15 to 17 pips, okay, or 20 pips to be the highest. That is what ICT actually said originally. And what are the assets to be traded during this time? You can trade any dollar paired currency, all right, or you can trade the futures indices. These are the things you can trade. So quickly, a recap. What you do is to look for this indicator called ICT silver bullet indicator by Lux Algo, and it will plot all these things for you, because the time, I think, sometimes is one of the major problem. And now I have gotten almost how many pips? Let's see, from here to here, almost 18 pips. Okay, it's enough. I would like to close it somewhere around here, or I can simply break even and allow it to go on, because it's almost getting late now. It's getting to the weakest part of the session. All right, this is one of the inactive session of the New York trading session. You now have active trades around this time, so I will just close it, or I will just break even and leave it like that for on. That is simply how to do the silver bullet. You can do it repeatedly, time and again, but I will prefer to trade this one, all right, instead of this one, or the other one, which is this one. All right, so I'll prefer to trade it. The other one is 3 p.m. to 4 p.m. New York time. So simple as that. So what is the strategy and how do we do it? All you need is to have your chart. What you need is a fair value gap and an entry. That is the simple thing to do. Let's assume this is my chart. All right, I am going bullish, 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 and I fall inside this ICT silver bullet time zone. This 1 hour window is where everything happens. You drop down to the 5-minute time frame and you will see it like this. So the next thing to do is to look for any fair value gap, especially when you have this confluence. All right, if you look for any fair value gap in it, and ICT did not specify whether the fair value gap is going to be in discount or premium, and this is it, you have a break of structure to the upside. Is that not a break of structure? A perfect one, or even a shift in market structure. As soon as price comes back to this area, you are sure of getting this trade to give you at least 15 or 20 pips. The same thing if you are going bearish with this particular trade, you will apply the same principle. If you see, let's assume a shifting market structure, just like in the situation I have, shifting market structure somewhere around here, and you have price retracing into that particular fair value gap, that becomes a very good point for that entry. All right, that becomes a very good point for that entry. Then you sell from there. That's basically what I did. All right, everything was explained to you in detail. I had this shifting market structure right here, and then price retraced into that implied fair value gap, and I took it. And that's one thing with ICT. You can be dynamic with your entries. You can be dynamic with what you do with the trades. So with experience, I've been able to figure out these things, and that is what I give you every day to educate you and help you to become better. Guys, the goal is to be profitable. The goal is to be profitable. It's not about taking trade haphazardly. You just want to take trade. Your body is shaking you, and you end up losing money every time you take trade. You have to be patient. Get a good setup before you take a trade. Don't force your opinion on the market. Just be patient and take your trades one after another. All right, guys, so this is all about this video. If you find value in this, make sure you give me a like, make sure you subscribe, make sure you turn the bell notification. Thank you. See you in my other videos.